Hello and welcome to Moneylife News and Views. I'm Debashis Basu. Borrowers in India, especially those who have taken loans under floating rates, are having a tough time. Now, one of my friends who's had a ringside view of the financial sector for decades, he's worked in a bank, in the stock market, in rating agencies, and a mutual fund. He firmly believes that the financial regulators are there to help the industry, usually at the expense of the financial consumer. Now, I understand and agree that regulators have absolutely no empathy for consumers. But I've been skeptical of my friend's view that regulators are there to help only the industry grow at the expense of the consumers. However, the long-running saga of banks and finance companies continuing to fleece floating rate borrowers makes me believe my friend is indeed right. As regular readers of this column know, I have been pointing out in great detail that lenders immediately increase their rates, their lending rates the moment interest rates go up, but do not reduce the rates when the same rates go down. This is a loot, and this has been going on for almost 2 decades. One of our friends, Srinivas Marathe, a retired banker, has actually quantified how much of overcharging is being done, even though lenders consistently have stonewalled his queries filed under the Right to Information Act. According to him, which is about 2 years ago, he estimated that the loss inflicted on borrowers by not reducing rates commensurate with the reduction of rates by the Reserve Bank of India as a whole for the entire industry is over 45,000 crores, simply because almost 80% of the floating rate cases, according to him, are not adjusted to the new interest rates. This fleecing of borrowers is so widespread and egregious that Moneylife Foundation filed a public interest litigation in the Supreme Court, leading to an order that the Reserve Bank of India should respond to us within 6 weeks. The RBI ignores Supreme Court order, as we know, in case of RTI being filed to find out about bank loans. So we didn't get a reply from the RBI, but within a few weeks or a few months later of this Supreme Court judgment in late 2018, the Reserve Bank of India mandated that lenders should link floating rates loans to an external benchmark, which is one of our demands. This way, rates would drop transparently when the benchmark rate declines. Lenders started implementing this new policy only 9 months later after the RBI's decision. But nothing seems to have changed much on the ground. Here is a sample of customer complaints on social media in just the last couple of weeks. Number 1, the first guy complains. Even public sector lenders have not reduced interest rates on my floating rate housing loan. Once RBI reduced repo rate, they immediately reduced the FD interest rate, but did not reduce the interest rate on floating loan. I had a very bad experience with Union Bank of India. Another person writes, at present, the home loan interest rate charged to me is around 8.2% when others are charging 7%. I want to know why. One borrower complains, I have a home loan with State Bank of India with floating interest rate. However, the benefits of the reduced rates are hardly passed on. I have been requesting the loan agent of SBI Faridabad branch. However, they don't care. Here is another complaint. When I contacted the bank executive who facilitated my loan, he asked me to visit the branch somewhere in Goregaon, which is in Mumbai suburb. When everything is at the click of a button, why am I asked to visit an office? Also, at the time of marketing the products, all the facilities are available at the doorstep. Here are some more complaints. They keep charging me a higher interest rate on my home loan when the market rate has declined a while ago, and when asked, nobody has an answer. They keep saying they will check and come back, and there's no coming back ever. The next one. Despite various requests, interest rate is not charged or modified corrected to the present floating rate. Banks are still charging me 10.4%. I feel cheated. It goes on and on. One more. We have taken a floating rate loan from IndusInd Bank, and the loan is and the bank is not willing to reduce the interest rates despite writing to them repeatedly. One more, it's been over 3 months since the rates have reduced. However, even after several requests, the same has not been reduced in my case. Complaints like these flood the social media. Every time the rate of interest rate changes, we need to fill out an application by going to the bank. What is the use of a floating rate loan then? One more, it's been more than a week. Application filed to reduce my floating interest rate, no response from the bank. Again going to the bank to follow up. The situation is really painful. The response from branch manager is not customer friendly, wondering why I took a loan from syndicate bank. When you see these complaints, you know nothing much has changed for the borrowers on the ground. And this sample of complaints which I just described is only from individuals, that too just over the last few weeks. Businesses taking floating rate loans continue to suffer silently, and that's a larger number. In effect, lenders have found a way to continue to fleece customers, and the Reserve Bank of India, which has no interest or no mechanism to get feedback from retail customers, bank customers that is unaware. If made aware, it remains silent, proving that it has no problem in allowing lenders to short charge its customers. This is why my friend probably said that the regulators are there to help industry make more money. After all, this loot of not passing interest rate reduction has been going on for more than 2 decades, and RBI knows all about it. Under different regimes, think about prime lending rate 1994, benchmark PLR April 2003, base rate 2010, marginal cost of funds based lending MCLR brought in 2016 under Raghuram Rajan, and finally the external benchmark rate of 2019, which came under the current governor. If the RBI is really interested, however, the solution is startlingly simple. One, put the onus of reducing rates on lenders, not on borrowers. Make it automatic. And two, as a corollary, use technology to make rate reduction the default option and insist only on a negative consent. That is, only those customers who explicitly say they don't want their rates to be reduced, and I know who these customers would be, only they will not get the benefit of reduced rate. Technology can easily deliver these two objectives. Unfortunately, for all the advancement in so-called fintech, that's all for marketing, customer onboarding, and operational efficiency of the lenders. Fintech is never designed to benefit the borrowers. Thanks for watching.